Welcome to the Swing Trading Strategies video series. In this video, we will see how to use RSI indicator bullish divergence in trading. This entire series is focused on what to trade, when to trade, and how to trade. And I've covered various topics of swing trading in great depth. And in case you have landed directly on this video, do watch the remaining 7 parts of Swing Trading Strategies video series that I've already released. Link to the same is given in the description box below. So by the time you finish this video, you will have learned about how to use RSI indicator with bullish divergence. I will take you through some basics of RSI indicator bullish divergence, and then I will give out some specific rules for this particular strategy. I will also point out the most common mistake while applying RSI indicator bullish divergence, and I will also show you how to spot demand and supply in this method. In the end, I will show you how to identify high probability RSI indicator bullish divergence trades and will show you trade and risk management with respect to this particular strategy. So let's get started. So I've covered RSI indicator in great depth in a separate video. Link to that video is in the description box below. I would strongly recommend for you to watch that video because I've covered a lot of basics about RSI indicator. Now focus of this video is how to use RSI indicator to trade bullish divergence. Now divergence is an excellent concept which essentially signifies price and indicator conflict when it comes to overall price outlook. Divergence can be used with any other indicator as well, and in very simple terms, under RSI bullish divergence, price actually forms a structure of lower low, whereas RSI forms a structure of higher low. Now this essentially means that RSI bullish divergence suggests positive outlook for price. The RSI parameter that I have used in this particular strategy is the standard parameter that is for 14 periods. So now focus on the chart in front of you. In the chart above, price is forming a clear structure of lower low and lower highs. So if you look at this price structure, price has formed a low here and it has formed a low at this particular point. Now below price, this is the RSI indicator. Now what you can see is that below this low point comes the RSI low point, and below this price low point you can see RSI low point again. So RSI indicator is actually forming a structure of higher highs. That is, this low point is higher than the previous low point. Now this phenomenon of price forming lower low, whereas RSI indicator forming higher low, this is called RSI indicator bullish divergence. Now RSI indicator is a momentum indicator. What bullish divergence essentially indicates is that while price is forming lower low, momentum on the downside is missing, and therefore a rally might be in the offing. It's important to note, however, that RSI bullish divergence is just an indication of what might happen. You still have to confirm this with price. Now this is something that I will cover in the later slides. In this particular section, I will highlight the most common mistakes while using this particular strategy. First thing that I would like to focus upon is time frame. Now, in my opinion, daily time frame is the most suitable time frame for swing trading. 60-minute chart is also another good time frame if you would like to prefer it. However, at all costs, avoid shorter time frames for this particular strategy and trading in general. Anything below 30 minutes is not advisable, and you will just be making your broker more rich. The second thing that I would like to focus upon is the number of divergence signals. Now in a given chart, you will find many divergence signals. Trading every divergence signal is a sure shot way of making losses. I will be showing you in subsequent slides how to target high probability divergence signals. And the last thing that I want to point out is that, like all methods, divergence is prone to failure as well. Now a lot of traders think that they spot a divergence and the trade has to work. That is not the case. In my opinion, the success rate for divergence is somewhere between 35 to 45% only. So in the previous slide, I mentioned that the success rate of RSI indicator bullish divergence is roughly between 35 to 45%. This means that this is very similar to trend trading in terms of probability of success, and which is why if someone trades this particular strategy, he or she should trade it consistently for the long term so that law of averages work in your favor. If RSI divergence has merit in it, the question that a lot of traders ask is that why is it that it is successful only 35 to 45% of the time? See, the thing is, RSI bullish divergence is formed in bearish market conditions and bearish price structure. Now you will hardly find RSI bullish divergence in a strong uptrend. Now this is the most undercovered point about RSI divergence, because this changes the outlook of a trader on how he views divergence in general. So let me repeat this again. RSI bullish divergence is formed more in bearish market conditions, and which is why this is subject to failure as well. Always keep this in mind when you are using divergence as your trading strategy. So now let me show you how to spot high probability RSI bullish divergence signals. Now, one of the most common mistake committed by traders is to trade every divergence signal that shows up on the chart. Now look at the chart in front of you. There are two bullish RSI divergence signals. One is here and another one is at this point. So the second RSI bullish divergence signal is more stronger than the first one. The reason being that the first RSI bullish divergence signal that you're seeing, the prior down move before this bullish signal starts to form is comparatively weaker than the extent of down move that you see in the first signal. So this is the number one reason that you need to consider while picking out high probability divergence trades, that you need to look at prior move that has happened. This is roughly about, this move is from 19,000 to about 17,000, whereas this divergence move has formed after price has declined from 18,000 to 14,000. So naturally this down move is more relevant than this particular down move. So this is what determines the importance of a divergence signal. Again, this topic is largely uncovered. Importance of RSI bullish divergence directly depends on extent of prior down move on the chart. Now, larger the down move, the greater the importance of RSI bullish divergence. I hope this point is clear. So this chart in front of you is actually an example of weak RSI bullish divergence, mainly because you look at the prior down move that has happened. It is not that great in terms of overall movement in Bank Nifty, and you do see that after this divergence, this bullish divergence that has come up, price has moved up, but it could not sustain. So again, look at the price fall that has happened before the divergence has got formed. The price fall is of about 13,000 to 11,000, about 2,000 points only. And then you get a corresponding move on the upside. Now this particular chart that you see in front of you, both are cases of strong RSI bullish divergence signal. So look at the fall in price that has happened. It is almost vertical. After that, a divergence signal shows up in RSI and then price moves higher. Again, you see this is a very latest chart, that is September, October 2018 for Bank Nifty. Again, you see a vertical drop coming in price. We get a RSI bullish divergence and we have seen price moving up. So let me repeat again, the way to identify a high probability RSI bullish divergence signal is to look at the previous move that has happened. If the move is strong and it's with good momentum, then the bullish divergence signal that forms is actually a high probability one. Try and ignore these sort of bullish signals where the prior down move is not that much in terms of percentage movement. So now what I'll do is, let's get down to specific rules for this strategy. The first rule that I want to put out is that of time frame. Now daily time frame has to be preferred for this strategy. You can experiment with let's say a 60-minute time frame as well, but I would strongly recommend sticking to this daily time frame interval. So the first rule is that of time frame, that is daily chart for this particular strategy. The second rule is targeting high probability divergence region. That is something that we have just seen in the previous chart. Third rule is sign to get ready. Remember one thing, that when you spot RSI bullish divergence on the chart, it is just a sign for taking a long trade. The fourth rule is the trigger. Now, once you have this rule 3 satisfied, you then need to look for price confirmation. You cannot go and blindly buy just because the RSI bullish divergence has shown up. So you don't have to act until and unless you get a confirmation. This particular trigger part I will discuss in next slide. So the fifth rule now is the stop loss. Now, most recent low on price should be the stop loss. Let me just show it on the chart. So hypothetically, let's say I take this divergence signal and I enter somewhere here, or let's say here, this low point, that is the most recent low, would be my stop loss. So rule 6 is that of risk. Now, if you're a beginner, don't risk more than 0.5% of your account size. If you are comfortable with trading, then I think don't risk more than 1% of your overall account till you master this particular strategy on any given trade. So let us now move to how I execute the signal and trigger part of this particular strategy. So we have two RSI indicator bullish divergence here. The first one is here and the second one is here. Now let me remind you, the reason why these signals are high probability ones are because they are coming up after a significant decline in price, like we covered this topic 2 slides back. So let us take the most recent case here. Now RSI bullish divergence got completed at this particular point in last week of October. Therefore, we had a valid signal somewhere in middle of October because RSI divergence had completed back then. Now, based on the rules we have seen, once the divergence is complete, this is just a signal that you should be preparing for a long trade. Now, as a part of trigger, what I do is to initiate the trade, I move down to a 60-minute time frame chart and then I look for a trade. So let me repeat, the signal portion I look for on daily time frame chart and the trigger portion I look for on a 60-minute chart. Now this is a 60-minute chart. Now for trigger, I am looking for a simple pattern of formation of higher highs and higher low on a 60-minute chart. That is when I go and enter the trade. Now based on what we have discussed, what I'm simply doing is I'm looking for a structure of higher high and higher low and then breach of a valid pivot. Now we have seen in the previous chart that the bullish divergence signal got completed in mid of October. And since then the price moved lower, forming a structure of lower high and lower low. It is only in early November, that is 2nd or 3rd November, that price, after forming a structure of lower high and lower low, formed a major pivot, then retraced and then again broke this pivot at this particular level. So this becomes my entry point. So I'll again repeat, once you see a RSI bullish divergence signal playing out, if you look at here, by the time this bullish divergence signal completed, price has already rallied to this level. Now it makes no sense to enter here, which is why we then move to a lower time frame chart, that is 60-minute time frame chart. And once this structure of lower high and lower low is breached at this particular point, that is, you take a major pivot and draw a line, and when price moves above this, you have a valid pivot breakout at this level. Now this becomes your entry point and then you take the trade. Now unless and until this happens, you shouldn't be entering the trade. There will be some occasions where once the divergence is formed, price does not retrace back, that just takes off. Well, you know what, that is an unlucky trade, just let it go. But we are playing for a simple pattern that once the signal is confirmed on this particular daily time frame chart, we simply move down to a 60 time frame chart, 60-minute time frame chart. We wait for a structure of higher high and higher lows to emerge, and then we take the entry. So this is nothing complex. It's just a structure of higher high and higher low, which I've discussed many times in many of my videos, and it is very simple to execute. So that is all in this particular strategy. This forms the crux of it. The rules that I have given out, that is to ensure that you stay in the right direction of following a proper method, and then you build on it. So what I'll strongly encourage for you guys to do is that this was an example of Bank Nifty that I took up. If you track any other stock or any other, let's say, commodity or index that you want to analyze through this RSI bullish divergence method, what you can do is, after this video, open up your charts and try and find out some bullish trades. And then what you can do is you can post in the comment section below, and I will answer those specific queries whether they qualify as per RSI bullish divergence or not. So in this particular video, what we have seen is that RSI indicator bullish divergence is a very powerful concept. It's just that you have to be careful in execution, as it mostly forms in a bearish price structure or bear market. The key point that you should note are that of time frame, importance of signal and trigger, and importance of not risking more than 0.5 to 1% on any given single trade. Now, avoid short time frames at all costs, and always remember that this is a counter trend strategy and you have to be extremely careful here. Now, the way to succeed in this particular strategy is that you have to practice this strategy and take notes. And then if you have doubts on this, let me know in the comment section below and I'll get back to you as soon as possible. So that's all for this week. I will see you guys next week with another video that will help you strategize better in trading. Thanks a lot for watching this video, guys. Be safe.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.